Over the previous 7 weeks, we've been building up a picture of the financial affairs of our two protagonists, Fred and John. We are getting to the pointy end, so this week we'll recap their situation. Fred lives in his own house in the West, valued at $570,000. The property is debt-free. He has an investment property in the Northwest in a well-regarded suburb with an outstanding debt of $195,000. John lives in his own house in the suburb on the east, valued at $1.5 million. He owes $1.2 million. He has an investment property in a Dress Circle eastern suburb, outstanding debt $800,000. Fred bought a new car in 2002, used a deductible personal loan, depreciated the car at 25%. The loan was $730 per month. He has owned the car outright since 2007. Expenses associated with the car, all deductible. The Ford is now worth $8,000, and now that it is his only car, he claims 70% of the vehicle expenditure. John leases his car early this year with no equity. He trades every 2 years when the car runs out of warranty. He paid $350,000 for the car. He has a guaranteed buyback of $225,000 on the car's second birthday. Lease payment, 6%, a special from the Porsche dealer, costs $6,666 per month. Due to the luxury car tax, the lease is only partially deductible. John is able to deduct $1,080 per month. Fred's total income is $95,200. His deductions are an investment loan, $16,575, with property expenses of $2,000, gives Fred a taxable income of $76,625. John's total income is $450,000, with deductions, investment loan, $64,800, car, $12,960, property expenses, $2,500, giving John a taxable income of $369,740. The tax on Fred's taxable income is $17,700, giving him a disposable income of $58,925. The tax on John's personal income is $146,000, giving him a disposable income of $223,740. Welcome back. I'm joined by David. David, you're an electrician with Davcoal Electrics Australia.
That's right.
That's your company.
It is.
Tell me a little bit about Davcoal Electrics.
Basically, I've been working for myself for about 6.5, 7 years. I was in a business partnership previous, and in August last year we formed our own company, which was Davcoal Electrics, and it's basically myself and an apprentice, and away we go.
So if you need your lights turned on, speak to David. David's helping us with a reverse interview with cash flow. No, David, what's your first question?
My first question is, you've spoken about various accounts for cash management. I'm not clear on how I'd actually go about doing so.
Okay, that's fine. So, what we're talking about is, we're talking about splitting up accounts so that instead of having one account and having to manage the money, you have a number of accounts, and those number of accounts help manage money for you. So we start with a hub, and you throw all of your money into a cash hub.
Okay, so I know I have to do a budget, so I know where the money flows. Then what?
Okay, so the budget is necessary, even though the system itself, once it's set up, will just have the money going where it needs to go. You need to do a budget first so you know how the money should flow. So you need to know how much you're spending on electrics and bills and gas and water, and how much you're spending on debt, mortgages or credit cards, how much you stick in your pocket and waste. So once you know that, you can set the limits up on the accounts.
Okay, say I have 3 bank accounts and a mortgage. What should I do?
Okay, 3 bank accounts and a mortgage is about normal, really. Yeah. So you set up a cash hub, all your money goes in there. The budget should tell you if you've got any spare cash. And most people do, amazingly. When you do a budget, you actually find there's money not being spent. That's 2 reasons. 1, because it actually isn't being spent, and 2, because you haven't accounted for it. Okay. Right? So I've found $200 a week that's not being spent. mostly you find 100 is really genuine and 100 is just unaccounted for.
Okay.
So you use that 100 and you say, look, I'll set up a debit from my account, my hub, to pay my mortgage. I've got 100 free cash flow, I'll lob that into my debt.
Okay.
All right. Then you need to set up another, you've got 3 accounts, you might need to lose one. One of them you set up to receive all of your cash payments. So everything that was cash, so your lunch money, it would be your paper, anything that you took money out of your pocket and bought. And the final account you'd set up would be the account to pay all the regular bills. So you can see that in establishing the hub, you need really an account that doesn't charge you anything, hopefully, for transferring money around, because that's all it's doing.
Okay.
Once you know where the money should flow, you set the hub up to do it, and then if you're paying your bills, and after a little bit of time, I don't know, 6 months, 9 months, you find that you don't have the money to pay a bill, you've got to go back there and look at it. If after a year you find you've got a little bit spare, then maybe you might have allocated too much, but it's nice to have a buffer anyway.
Mm.
If the money you've allocated to the cash account is not enough, then you've got 2 choices. Find some money somewhere else or spend less.
Okay, so I've got to name the accounts that I'm going to keep.
Okay, that's good. That shows you've been paying attention, right? The accounts you got left, you name.
Yeah.
And so you've got a cash account, that's the one that puts money in your pocket, call it cash. You got a bills account, that's the one you pay bills with, call it bills.
Okay.
And the mortgage account, call it debt. And then once you've got these labels on the accounts, you know what they are and you only use them for that. And again, that just makes the system flow and work for you.
Okay, I think I can see the structure. Which accounts would be best for the hub?
Okay. I think I've mentioned that the hub should have should be a low transaction account.
Yep.
So I've got another preference for that account to be out of the way as well. So a cash management account that's hard to get to is often very good, because to my mind the last thing you actually want to do is to go there for money.
Yep.
You can, in allocating the money across the accounts, you can leave a little bit in the hub as well if you like, because the car is always going to break down.
Mm-hmm.
You know, there's always going to be a wedding that you don't have a suit for. Your wife is always going to need a dress. So
Yeah.
having a little bit of money that's not accounted for is really useful. And if you've got your cash account out of the way, not accessed by a branch, then
Yeah.
there's less sort of temptation to go there early and steal it.
Okay. Do I need to continue the budget? That might be a bit of a pain.
No, once you get it all set up, you can see how the money might begin to flow.
Yep.
You do have to budget if it's not flowing. So if you repeatedly want more money out the cash account than is in it, then there's another budget process, because clearly you got it well wrong.
Okay.
If you repeatedly don't have enough money to pay bills, a budget process, because you might have got it wrong, right? But alternately, you could simply say, I need to put more money in and take it from somewhere else and see how you go.
Yep.
If on the other hand, you've got money left in the account, good, allocate it somewhere else. So
Okay.
if you're spending $20 less a week in the cash account, lob it into your debt. If you're left with heaps of money after the year in your bill account, good, throw it and lob it into your debt.
Okay.
Thank you very much, David, for joining us.
Pleasure, Kerry. Thank you.
I think that David's done a wonderful job for you. As usual, if he didn't ask a question that you wanted asked, there's the blog on the website. So thank you once again, and we'll see you next week. Don't forget our competition. Please go to the website and sign up for our 100 Goal Challenge. Prizes are being generously awarded by AIA Australia, who are giving a free risk assessment away every week, and 2 iPads to be won throughout the series. And also Keith Abraham, who's donated his book about finding your passion. Go to the website wealthplan.tv. Thank you for joining us on Wealth Plan TV. I hope you enjoyed the show. Next week we'll be dealing with debt.